This is a summary of Moderna's mRNA fourth quarter 2025 earnings call transcript, focusing on key financial metrics, management outlook, risks, and significant statements. Financial performance and outlook. Revenue. For Q4 2025, Moderna reported $700 million in revenue, exceeding guidance. Full year 2025 revenue reached $1.9 billion, primarily driven by sales of Spikevax and the newly launched Next Spike. Profitability. The company reported a net loss of $800 million in Q4 2025 and a full-year net loss of $2.8 billion. Gross margin. While not explicitly stated as a percentage, the transcript mentions a 41% decrease in the cost of sales for the full year 2025 compared to 2024, driven by manufacturing efficiencies and lower inventory write-downs. For 2026, an improvement in gross margin rate is projected due to manufacturing efficiencies and volume leverage. Operating expenses. A significant focus was placed on cost reduction. Operating expenses decreased by $2.2 billion, or 30%, for the full year 2025. R&D expenses were down 31%, and SG&A expenses were down 13%. Cash position. Moderna ended 2025 with $8.1 billion in cash and investments, slightly down from the previous year, primarily due to operating losses and R&D investments, partially offset by a credit facility draw. 2026 financial framework. Revenue growth. Expected to be up to 10% in 2026, driven primarily by international markets and strategic partnerships. Geographic mix. Expected to be more balanced between the U.S. and international markets, shifting from a 62% U.S./38% international split in 2025. Revenue weighting. Heavily weighted to the second half of the year, with approximately 15% in H1 and 85% in H2. Cost of sales. Projected to be around $900 million, flat year over year, but with improved gross margins. R&D expenses. Anticipated at approximately $3 billion, a slight decrease from 2025, reflecting continued investment in late-stage pipeline. SG&A expenses. Expected to remain flat at $1 billion, with a focus on efficiency to fund new commercial investments. Total GAAP operating expenses. Projected at $4.9 billion. Cash costs, excluding non-cash items, expected to be $4.2 billion. Capital expenditures. Projected between $200 million and $300 million, including investment in U.S. fill-finish capacity. Ending cash. Expected to be between $5.50 to $6 billion at the end of 2026. Key highlights and lowlights. Highlights. Successful launch and strong market share of Next Spike in the U.S. Significant cost reductions achieved in 2025, exceeding original targets. Completion of enrollment in multiple late-stage oncology studies, adjuvant melanoma, adjuvant renal cell carcinoma, muscle-invasive bladder cancer. Positive 5-year Phase 2 data for the INT individualized cancer therapy in adjuvant melanoma. Secured new commercial agreements, including a global deal for propionic acidemia candidates with Recordati, and a 5-year respiratory vaccine supply agreement with Mexico. Approvals for Next Spike in Canada and Australia, and for strain-updated Spikevax in the UK. Progress on pipeline programs, including the norovirus Phase 3 and propionic acidemia registrational studies. Welcome of Dr. David Berman as Chief Development Officer. Lowlights, FDA's refusal to file letter for the flu program, mRNA 1010, creating regulatory uncertainty in the U.S. Disappointment regarding the flu program's U.S. regulatory path, and its impact on future break-even guidance is currently unclear. Net losses continue, although the magnitude has decreased year over year. Management's forecasts for future quarters/years. 2026. Expect revenue growth up to 10%, with significant international contribution. 2027. Anticipate substantial market expansion in Europe as a competitor pandemic contract expires, allowing for launches of next spike, flu vaccine, and flu-COVID combination vaccine. Growth is also expected from new multi-year agreements in Latin America and Asia Pacific. 2028. Continued new product-driven growth with potential launches of combination flu-COVID and norovirus vaccines. Significant risk factors. Regulatory uncertainty. The FDA's refusal to file for the flu vaccine highlights the challenges and unpredictability of the U.S. regulatory environment, potentially delaying innovation and patient access. Competition. The market for respiratory vaccines is competitive, and future success will depend on product differentiation and market access strategies. Clinical trial outcomes. While promising, the success of late-stage clinical trials for oncology and infectious disease programs is not guaranteed. Reimbursement and pricing. Pricing for vaccines in international markets and the evolving COVID-19 vaccine landscape could impact revenue. Execution risk. Achieving projected revenue growth and cost reduction targets relies on continued strong commercial and operational execution. Most important statements from CEO and CFO. Stefan Bancel, CEO, expressed disappointment with the FDA's refusal to file for the flu program, emphasizing the negative impact of regulatory uncertainty on innovation, patient access, and U.S. leadership in medicine. Highlighted the successful launch of Next Spike in the U.S. and the strategic importance of new commercial agreements. Stressed that 2025 was a key turning point financially, with improved commercial execution and cost reductions. Emphasized the company's mission to deliver the greatest possible impact from mRNA medicine. James Mock, CFO, detailed the strong Q4 and full year 2025 financial results, noting revenue at the higher end of guidance and significant cost reductions. Explained the higher-than-expected year-end cash balance was due to exceeding cost reduction plans, lower capital expenditures, and strong working capital management, not assumed revenue growth. Provided a clear financial framework for 2026, projecting revenue growth, improved margins, and disciplined R&D investment. Stated that the impact of the flu program's regulatory situation on long-term cash flow break-even guidance is difficult to assess at this early stage. In summary, Moderna is reporting a Q4 2025 with solid revenue performance and significant progress in cost management, despite a substantial net loss. The company is looking ahead to 2026 with an expectation of returning to revenue growth, primarily driven by international markets and strategic partnerships. However, regulatory headwinds, particularly concerning the U.S. flu vaccine filing, introduce an element of uncertainty for future U.S. market access and long-term financial projections. The pipeline, especially in oncology with the INT program, remains a key area of focus and a potential catalyst for future value.